George, Harvard Business School professor, former Medtronic chairman and CEO, member of a couple of boards at companies you might know of. One's called Exxon, one's called Goldman Sachs.
Right.
Bill, great to have you here in the house.
Thank you very much.
You know, just a second ago, Melissa ran a bite where Jack Ma said that if he had a company today, he wouldn't take it private. If you had a company like Jack Ma's company, successful, fast-growing, you serve on public company board, would you take it public today?
I think a lot of people are thinking long and hard about whether to go to public because of the pressure of short-term investors. And that's why you see, Tyler, a lot of them go for two voting classes stock. All the Silicon Valley companies I've been talking to are all looking, they're going to hold off the market as long as they can. And when they finally go public, they get better share distribution, better monetization. They're probably going to go with two voting. Now, in governance terms, that's bad, but I actually understand why they're doing it. I actually think it's probably
because they
wise thing.
They have the voting shares, and they then control the company as if it were a private company.
Because they're looking for long-term objectives. I think public companies today, you saw what Mike Dell went through. It's very hard to go from public to private if you're really large and have a large market cap. So I don't think you'll see a lot doing that. But I think you see more newer companies holding off the market and then going public at the last minute.
That changes then the idea of growth in the IPO market if these are much more mature companies coming to market as opposed to, say, 10 years ago.
I think it definitely does. I don't think that's all bad. I think these companies need to mature a little bit, maybe under the watchful eye of private equity people and venture capitalists. A guy like Mark Andreessen, if he's watching you, you're going to be a lot better off.
One of the things I know you follow is the difference or the dispersion of the pro forma numbers that we report. One of the things that public companies have to look at every quarter.
Right.
Am I going to hit the number or not? And then the gap numbers. And you're a big believer in transparency and explaining to shareholders what the earnings really come from.
Yeah, if you just look at reported, you're going to get a distortion of currency, of acquisitions, of one-time write-offs, regulatory costs. I think you have an obligation to do the gap numbers and to say what is the real number, just for acquisitions, just for divestitures, but particularly the currency, because no one's quite getting that. And I think we need to look at the real numbers and then look at organic growth. Same-store sales. If you're in the beverage business, what's your actual case sales? Look at the real numbers, but then give a track back to the reported numbers.
Is a widening gap between the two numbers a troubling sign at all? Should investors be concerned that these two sets of numbers are getting farther and farther apart?
Potentially. I think if there's a lot of rationalization, and regulatory costs are real costs, so we shouldn't fully discount that. So I think it all depends on what they come from. But yeah, I think a widening gap is a yellow flag, maybe orange flag.
You teach now, you serve on two public boards, Exxon, as I mentioned, and Goldman Sachs, but you grew up in the healthcare industry.
Right.
And one of the things we report on every day here is the astronomical, insane price of prescription drugs, at least the price that's charged here in the United States. How big a problem is that? How inevitable is a huge and potentially society-rending collision over the price of these drugs, which may or may not be able to save lives, certainly can improve quality of life, and the collision between the people who can afford it, the people who can't, the insurers who don't want to pay for it, and the drug companies that price at $75,000 or $80,000 a month?
I think it's a huge problem, and I think they really need to moderate their prices. I've just watched these increases. I'm very concerned about. It's a question of access. Who can get access to drugs they need to save their life? There's nothing about cancer, Tyler, that suggests it's only for people that have the money. Everyone has it, and you let everyone get access to the products. So, yes, you want to get a fair return. You want to be able to invest in research, but don't push the limits up.
So when you see the potential of consolidation in the insurance industry, do you see that as potentially a good sign, a step toward achieving drug pricing that may be more rational?
No, I think there's too much consolidation.
Too much consolidation in the insurance industry.
Yeah, the insurers are raising the prices 30 to 50%.
Oh, on the premiums.
How can this be a good thing? This is very worrisome to me. Just don't take advantage. Next thing you get a round of regulation. I don't want to see more. I'm not pro-regulation. I just think you want to modulate it and not push the limits, but make sure people get access to it.
All right.
So that's really important.
Bill, well said. Thank you very much. Great to be with you. We've got a little breaking news we're going to go to now. I know you got a book there. It's called True North. Pick it up. It's good.